So right now, the S&P 500 is hovering around all-time highs. Over the past week, the S&P 500 is down by nearly 1 entire percent. All of this activity hovering around all-time highs at the top of the market makes investors very, very nervous. The S&P 500 can't seem to be breaking 5,900 points, and there is a worry that this will all come to an end, and to invest now could possibly not be one of the greatest moves you can make. So one big reason as to why the S&P 500 hasn't completely come crashing down is the fact that over the past week, Tesla has shown incredible growth, picking up the slack for the S&P 500. And even then, the S&P 500 is down by nearly 1% over the past week. To make matters even worse, big analysts such as Goldman Sachs are saying that the stock market historic return of around 10% per year in the S&P 500 is going to come to an end, with the next few decades giving around only 3% instead of what we are used to. Despite all of this noise in the stock market, I have been investing £100 every single day that the stock market has been open, and this is my results over 2 weeks. Now, due to the current uncertainty of the stock market, many investors such as yourself might think that holding onto cash could be a good way to utilize the current situation in case there is a crash. However, I don't personally think that necessarily is the best thing to do, as we have proved time and time again through historical records that time in the market is usually better than trying to time the market. But regardless of all of that, I still have a lot of cash, £103,732, and that's why I'm doing this series, to show you that, there really isn't necessarily a bad time to be investing if you intend to do it regularly and over a long period of time. Now, the platform I'm using to invest £100 every single day the stock market is open is Trading212, and if you would like to sign up and get a free fractional share worth up to £100, you can follow the link in the description down below. Or alternatively, if you've signed up less than 10 days ago and haven't received a free share, all you have to do is hit the 3 horizontal line menu over here, scroll all the way down until you see the use promo code section, and then enter the code JUBAIR, and you should receive a free fractional share. Now, in addition to investing £100 every day into the stock market, I have also made a challenge on my Trading212 Invest account to invest £10 every single day the stock market is open into the S&P 500. As we know, the S&P 500 isn't the entire stock market, but it is definitely the most major index that we use as investors or analysts to set as a benchmark for the total stock market. So I've chosen to invest £100 every single day into the Invesco FTSE All World. I often get questions as to why I chose Invesco over Vanguard or iShares. And my simple response is that, this channel is never financial advice. You should go with the provider that you are comfortable with. And ultimately, I don't feel like there are any huge differences between the lot. They do track very similar indices, and that's what you should be looking at, where their holdings are, in terms of the world and in terms of the companies and sectors, and essentially the total expense ratio and the cost of the fund. If you want to invest in the long term, higher funds are ultimately going to take away from your returns. So something like Invesco FTSE All World, Vanguard FTSE All World, or iShares FTSE All World, they all have relatively low fees. So here is the pie investing £100 every single day. And if we switch back to the week view, you can see every single day I have deposited £100. Currently, we are sitting at a minor loss of 0.17%, or a loss of £1.67. You can see that I have been buying shares every day, and now I have amassed 188 shares in the FWRG, the Invesco FTSE All World. Over the past week, the Invesco FTSE All World overall has actually gone down by 0.45%. We can see that we are below our average buying price of 530 pence. However, this is by a very small amount. So in 2 weeks, we actually have only lost £1.67. If I had to predict, what would have happened 2 weeks ago, I probably would have thought we were down a bit more, just given the fact that there is a lot of volatility in the stock market, especially in the short term. If you invest for a longer period of time, you do increase your chances of not losing money essentially in the stock market. But that being said, it is very important for you to invest into something that you hopefully understand, because not all indexes are actually going to be profitable in the long term. Something like an All World might be, but remember to always do your research. So far we haven't actually experienced any massive crashes in the stock market only down by 0.17%. That is a very small amount. Now, a lot of people ask me why I invest into an all-world index instead of investing into the S&P 500, which has had all the gains over the past few decades. And you can also see over the past week, the iShares Core S&P 500, this has the ticker code IUSA. This is actually up by 0.13%, where our all world was down by 0.45%. So definitely this over the past week has returned a lot more. So here are the results for investing £10 every single day for 2 weeks that the stock market is open anyway. So over the 2 weeks, we are up by 0.15%. Even though it does say 0.13% here, we can do our own math and see that, we are actually up. If we put in just £10 every single day, we are up by 15 pence. I'm not sure why the math is off there. So currently I own 2.23 shares in the IUSA and we are up by 15 pence. But if we go by what Trading 212 is saying, it's 0.13% and that is a gain of 13 pence. Again, if you asked me 2 weeks ago before the challenge started where I would think we would be at the end of 2 weeks, I probably would have thought we were going to be in the red a bit, but by dollar cost averaging, I thought we could actually, smoothen that out. But I would be wrong, we are up by the tiniest amount and that is still a positive effect. In the short term, like I said before, there is a higher likelihood that you could lose money because of the short-term fluctuations. So make sure to check out some of my other videos and I'll see you in the next video.